Good afternoon, students. This is CA Rajeev Sachdeva here, faculty member, Board of Studies of the Institute of CAs of India. I will continue my last lecture, that is on company audit. We will continue with the provisions of the company audit. I have already discussed, as you are aware, we have already discussed section 139(1) and section 140. I will give a brief overview of section 140. Before starting my lecture, I will read out disclaimer. Yes, students, you may note the disclaimer. You are advised to refer to the study material of the institute, including supplementary study material if there is any, and other relevant legislations for latest provisions, amendments required for forthcoming examinations. This is disclaimer, you must note that. We have been receiving lot of queries from your side through mails and queries for this mentoring section. We have also received, and most of the queries are on the point that is there any change in the syllabus, change in the company that provisions. You may note, I am telling you the changes we have made this time in the syllabus, or say in pronouncements. So you may note that for relevant notified sections of the Companies Act 2013 and other legislative amendments, including relevant notifications, circulars, rules, guidelines issued by regulating authorities for anything, for Companies Act provisions or any other circular, notification, rules, law, etc., cut-off date will be 31st October 2015. So law till 31st October 2015 will be asked in your examination. This is very important. CARO, as you are aware, CARO was very much applicable for even for November 2015 examination. So CARO 2015 issued by Ministry of Company Affairs on 10th April 2015 is very much applicable this time for 2015 May 2016 examination. Applicable list of pronouncements. This is very much hosted on the website of the institute as well, and also you may refer it in the student journal. So applicable list of pronouncements for May 2016 examination, you may note the standards on auditing which are relevant for your examination: SA 200 series, 210, 220 and so on, entire 200 series, then 300 series, planning and audit of financial statements, risk, materiality in 400 series, 402, SA 450, and then 500 series audit evidence related, sampling, etc. SA 600 series, 700 series, modifications to the opinion in the independent auditor's report, SA 705, 706, up to 720. From SA 200 to 720, this is very much covered in your syllabus. The auditor's responsibility, SA 720, is on the auditor's responsibility in relation to other information and documents containing audited financial statements. Statements issued by the Institute of CAs. Statement on section 143(1) of the Companies Act 2013. This is similar to section 227(1) of the Companies Act 1956. Guidance notes, students. There are 8 guidance notes which are relevant for your examination. This time we have introduced a new guidance note. You may note that 8th point, 8th guidance note on reporting under section 143(3)(f) and H of the Companies Act 2013. This guidance note, you may refer this guidance note in student journal. We have given in student journal. It will be published in the February issue. You may refer the February issue of the journal, student journal. Very interesting one, guidance note on reporting. I will cover when I will cover this in the company audit part while concluding section 143. Now this is all about you see applicable list of pronouncements, etc. What will be the cutoff date? What are the changes, as I have told you. Now I move to online queries, if any. Yes, students, we have received online query. Sandeep is asking, Sandeep Kumarina is asking, please give a brief explanation on standards of auditing. Yes, definitely. Why not? Sandeep, we will be covering essays after company audit is over. So you should wait till that time. And now you can attend this lecture basically on company audit. So we are covering right now, lectures on company audit. So over to coming back to my PPT. Students, we have been receiving lot of queries. Students, we have been we have received lot of queries from you. Yes, students, we are receiving lot of queries from you, and queries which are raised by you people are, what are the amendments in the company audit which are relevant for me? This I have already covered. How to study audit paper to achieve great knowledge about it. How to study audit paper, this I am simultaneously explaining while I am covering the course. Simultaneously I am telling you how to study law, related questions. And when I will move to the other part of the auditing, that is essays, etc., basic concepts, then I will teach you accordingly. So how to study, I am simultaneously answering along with my lectures. You may note down the important points which I have already explained. I will repeat in this lecture too. How to prepare revision notes for auditing, this I am explaining, this also I am explaining simultaneously. How to present any question of company audit, this I am telling you, students. How to present, this is very much covered while delivering my lectures. You may attend the lectures attentively, you will get the answer. How to remember the section, this also I am covering repetitively, you should study so you can remember. Learning techniques I am telling you. How to revise all the topics just one day before exam? This I will answer in today's lecture. What are the liabilities and duties of auditor? This I will be covering in section 143. Section 140 I have already covered. Section 139.8 I have already covered. Caro I will be covering. Yes, students, coming back to yes, students, coming back. How to study? How to study? My first point is learning, importance of learning. Students, you should learn the company audit provisions. Wherever the provisions of the law are there, whether it be rules, law, or anything. So you need learning basically. Learning is not cramming, learning is different from cramming. Learning is only after you understand the whole thing, only then you learn, and this will be called constructive learning. And if you learn, learning technique I am telling you, first time just go through the section. First you learn the section, but I tell you one time learning is not enough. Now next day, the very next day, say you learn a particular section today on 21st January. Then you need to revise this section on the very next day so that it may be settled. It may be settled in your mind. So very next day you need to again learn the section, again revise the section, and thereafter, after 1 week, say on 29th January 2016, again revise on 29th January 2016, and fourth revision should be after 1 month. First revision very next day, second revision you will do on next week, and third revision in next month, say on 29th February 20. So this is how you can learn. This is the technique of the learning. You learn 4 times. First time learning, 3 time revisions. This will, the whole thing, the section will get cemented into your mind. It will settle in your mind permanently. So learning is very important. I emphasize very much on learning. So I am telling you simultaneously how to learn. Learning is only, please remember, it is only after understanding the whole concept. Only then you can build a strong conceptual base. So this is how you can learn. Law related questions, again, I was telling you need constructive learning. Try to understand the intention of the lawmakers. Try to understand the intention of the law, what the law wanted to convey. That you need to understand. What the lawmakers want to convey. So that is the intention of the lawmakers. So basic intention of the lawmakers of the law should never be missing while you are explaining your answers. Always students, always prepare brief notes. Brief notes, I am telling you how to prepare. Just break down the whole section into parts and you will be able to prepare brief notes. You will be able to prepare to learn also. So also you can prepare diagrams in support. This will help you This will save time for you and your effort will also be minimum. This is how you can prepare your strategy. Students, for one group I am advising you to study for at least 1500 hours. 2 more points I want to elaborate. First, study for at least 1500 hours for one group. This is minimum I am prescribing, 1500 hours for one group. It means if you study for 10 hours a day, you need to study for 5 months. So 5 months effort minimum is required for, this is the minimum effort you require for clearing one of the groups. This is the total strategy I am giving you for your examination. Secondly, do prepare schedule register. Whatever you do, you record in this register, daily schedule register. You must prepare schedule register. This register you should prepare on daily basis, subject wise, date wise. On a particular date, just make entries in the register of the topics you are doing, of what subject. This will be, it means your study, whatever you are studying will be very much documented. It will be documented in the register, and subsequently this register will help you in monitoring your studies, in revision, and also planning your studies. So this is very important, you can prepare. So 3 important steps I have already, rather 4 steps I should say I have told you. First, study for at least 1500 hours for one group. Prepare daily schedule register. Translate your knowledge into brief notes and learn the sections and other part. How to handle the other part, essays part, I will tell you when I will be covering the essays. Now coming to section 140. Please remember, the last time in the last lecture we had covered section 140 of the Companies Act in detail. Removal, resignation of auditor and giving of special notice. According to section 140 subsection 1, the auditor appointed under section 139 I have already explained, may be removed from his office before the expiry of his term only by a special resolution of the company. So important point in this is, the auditor who is appointed under section 139, he may be removed. He may be removed from his office before expiry of his term. This is the first thing. But if you want to remove before the expiry of term, you need to pass a special resolution, of course after obtaining previous approval of the central government. So the auditor appointed under section, this is how you can prepare the brief notes. The auditor appointed under section 139 may be removed from his office before the expiry of his term only by a special resolution of the company. Before expiry, auditor appointed under section 139, he may be removed before expiry of his term or by a special resolution of the company, of course after obtaining the previous approval. And the previous approval, this is governed by rule 7 of the CAR. Removal of auditors before expiry of his term requires, this is the most important thing, is special resolution of the company plus previous approval of the central government. Special resolution plus previous approval of the central government. So 2 most important points. Please remember, in last lecture I had told you that for removal of auditors before expiry of term, special resolution and previous approval of the central government is required, and procedure Rule 7, I have already explained, for application in Form ADT2 need to be made to the central government with prescribed fees, and application pass board resolution apply within 30 days of the board resolution, and so on. So these points were already discussed in my last lecture. Section 140 subsection 2 provided that where the auditor resigns from the company, his duties are: he shall file within 30 days of resignation a statement in the prescribed form ADT3 with the company and the registrar. So ADT3 form, within 30 days of resignation, he has to file with the company and the registrar. So this is what section 140 subsection 2 conveyed. So this section was discussed at length in the last lecture, and here I am telling you in brief only, just for revision's sake. Now moving to my next section, students, section 141 of the Companies Act 2013, that is eligibility, qualification and disqualifications of auditors. Before moving to next section, I just move to online queries. Yes, students. Coming back to section 141 of the Companies Act 2013. Section 141 is eligibility, qualifications and disqualifications of auditors. Section 141 subsection 1, a person shall be eligible for appointment as an auditor of a company only if he is a chartered accountant. This is the first thing. A person shall be eligible for appointment as an auditor of a company only if he is a chartered accountant. Means only chartered accountants are eligible for appointment as an auditor of a company. In other words, I put it this way: if a company has to appoint its auditors, then the person who will be appointed as auditors, he can only be a chartered accountant. So section 141 subsection 1 says that a person shall be eligible for appointment as an auditor of a company only if he is a chartered accountant. So this is the first thing. You may note that a firm, students, a firm may be firm whereof majority of the partners practicing in India. Firm may also be appointed as auditor. Section 139 subsection 1, you can remember what we had studied in section 139 subsection 1 in the first lecture on 6th January. So you may note that a firm may also be appointed as auditor as per section 139(1). But here it is emphasized that whereof majority of the partners practicing in India are qualified for appointment as aforesaid. As aforesaid means only if they are chartered accountants, may be appointed by its firm name to be auditor of a company. So in case of firm, condition is majority of partners practicing in India and are qualified for appointment. As aforesaid means they also be chartered accountants. They may be appointed by its firm name. Firm name, example I had given you in section 139(1), Rohit, Mohit and Company, for example. This is the firm name, Rohit, Mohit and Company. So they can also be appointed by the firm name as auditor of a company, but majority of partners should be practicing in India and should be qualified for appointment. So section 141 subsection 1 states that a person shall be eligible for appointment as an auditor of a company only if he is a chartered accountant. This is the first thing. And firm may also be appointed as an auditor of a company, but whereof majority of partners practicing in India are qualified for appointment, means they should be chartered accountants, may be appointed by its firm name to be auditor of a company. Section 114, this is all about section 141 subsection 1. So 141, I hope 141 subsection 1 is clear to you all. Section 141 subsection 2 states that where a firm including a LLP, LLPs, limited liability partnerships, are also allowed to be appointed as auditors of companies. See the change made in 2013. LLPs, even LLPs are allowed to be appointed as auditors of company. So where a firm including a LLP is appointed as an auditor of a company, please remember only the partners who are chartered accountants, only the partners who are chartered accountants, means other professionals may also be partners in the LLP firm. So that is why we have said here, we are saying that only the partners who are chartered accountants shall be authorized to act and sign on behalf of the firm. So my question to you all is, in case of a LLP, where a firm including a LLP is appointed as an auditor, so if a firm is appointed as an auditor, who shall act and sign on behalf of the firm? So answer is only the partners who are chartered accountants shall be authorized to act and sign on behalf of the firm. So there has also appeared 2 marks question on this in your examination, previous examination, wherein it is asking all partners of firm are authorized to act and sign on behalf of the firm. The answer is incorrect. Not all the partners be authorized to act and sign on behalf of the firm. My answer is, where a firm including a LLP is appointed as an auditor of a company, so only those partners who are chartered accountants shall be authorized to act and sign. There are 2 words, to act, authorized to act and sign on behalf of the firm. So act and sign on behalf of the firm. So this is all about section 141(1) and section 141 subsection 2. Section 141(1) had stated that person shall be eligible for appointment only if he is a chartered accountant, and firm may, what was the condition? Whereof majority of partners practicing in India are qualified for appointment, as aforesaid, may be appointed as by its firm name to be the auditor of the company. And where a firm including a LLP is appointed as an auditor of a company, only the partners who are chartered accountants shall be authorized to act and sign on behalf of the firm. Hopefully these 2 subsections are clear to you all. Moving further, students, section 141 subsection 3. Under subsection 3 of subsection 141, along with rule, this has to be read along with rule 10. Students, please remember this Companies Act 2013 is rule based. This is rule based. So here the sections, most of the sections have to be read with rules. So subsection 3 of section 141 along with rule 10 of the Companies Audit and Auditors Rule, the following persons shall not be eligible. Here we are clearly mentioning the following persons shall not be eligible for appointment as an auditor of a company. Section 141 subsection 3 states, but along with Rule 10, very important Rule 10. The following persons shall not be eligible. Clearly, we are stating the persons who will not be eligible for appointment as an auditor of a company. So, very important question from examination point of view. Point number 8. A body corporate other than a limited liability partnership, other than a LLP. LLP, we have studied in subsection 2, 141 subsection 2 that LLP can very much be appointed as auditor. So here we have provided exception. Ki body corporate is disqualified, but LLP is not disqualified. Therefore, we have said other than a LLP. So body corporate is disqualified to be appointed as auditor of a company other than LLP registered under the LLP Act. So body corporate, here the point only is a body corporate. That's it. So what we are stating that the following persons shall not be eligible for appointment as an auditor of a company. First point, students, is a body corporate other than LLP, of course. B is an officer or employee of a company. An officer or employee of the company. So 2 points are very easy points. First point is body corporate and B is an officer or employee of the company. First point, students, A is body corporate and B is an officer or employee of the company. C, a person who is a partner. Now this is a lengthy function and typical one. A person not easy to learn, and students, you need to learn. A person who is a partner or who is in the employment of an officer or employee of the company. Now here it is difficult to learn, I tell you. Now for convenience, how you can prepare your notes. Now look at this. Following persons are disqualified from being appointed as auditor of a company. A person who is a partner or who is an employment, just leave it right now. A person who is a partner of an officer. Partner of an officer, or abhi chhod dijiye. Partner or of an officer of the company. So person who is, the following persons are disqualified from being appointed as auditor of a company. Partner of an officer of the company. First thing first, there are 4 points in this one line. Partner of an officer of a company. Secondly, or who is in employment means employee of an officer of a company. So partner of an officer of the company and also employee of an officer of the company. You may note down accordingly. Students, you may note down this, how you need to prepare the notes, how you need to learn. This I am telling you simultaneously. So following persons are not eligible. They are disqualified from being appointed as auditor. First, partner of an officer of the company. Second, employee of an officer of the company. Now, look at this. Partner of an officer or partner of employee of the company. So, third point is partner of the employee of the company. Partner of an employee of the company and similarly employee of an employee of the company. So, these persons, students, are disqualified from being appointed as auditor of a company. So a person who is a partner or who is in employment of an officer or employee of the company. So there are 4 persons in this which are disqualified from being appointed as auditor. Partner of an officer of the company, employee of an officer of the company, partner of an employee of the company, employee of an employee of the company. So this is section 141 3 clause C. Section 141 subsection 3, 3 points students we have covered. First, a body corporate is disqualified. Second, an officer or employee of the company cannot be appointed as auditor. C, a person who is a partner or who is in employment of a partner of an officer or employee of the company. So I hope this is clear to you. For example, Mr. A, Chartered Accountant, has been appointed as auditor of Lakshman Limited in the AGM of the company held in September 2014. Mr. A, Chartered Accountant, is appointed as auditor of Lakshman Limited in the AGM held in September 2014, which assignment he accepted. And students, subsequently in January, he joined B, another chartered accountant, but who is the manager finance, who is an employee of, who is the manager finance of Lakshman Limited as partner. So here you cannot be employee, you cannot join him, you cannot be appointed as an auditor if you are partner of an employee of the company. Here you, in this case, will be covered. Partner of an employee or partner of an officer, whatever the case may be. So partner of an officer of the company or partner of an employee of the company, because he joined the Lakshman Limited, as he was appointed in the Lakshman Limited as an auditor, and manager finance, who was working as manager finance, a person who was working as manager finance in, he joined him as partner. So disqualification, this is disqualification under section 141 subsection 3C of the Companies Act, that any person who is a partner or in employment of an officer or employee of the company, he will be disqualified to act as an auditor of a company. Subsection 4 of section 141 provides that an auditor who incurs any of the disqualifications mentioned in subsection 3 after his appointment, even after appointment, you incur the disqualification. After provides that an auditor who incurs any of the disqualifications mentioned in subsection 3 after his appointment, so you will have to vacate your office as an auditor. So in the present case, Mr. A, an auditor of Mr. Lakshman Limited, joined as partner with B. B, who is B? B is the manager finance of this company. So has attracted subsection 3C of section 141, and therefore he shall be deemed to have vacated his office of the auditor of Mr. Lakshman Limited. So students, this question is from practice manual. You can study the practice manual. Other questions also have been given in the practice manual. So you should study both practice manual and study material. D clause. Section 141, subsection 3, subsection D. Now we move to online queries, if any. Yes, coming back to the PPT, students. Section 141, subsection 3, subsection D. The following, what section 141, subsection 3 stated? Look at section 141, subsection 3. What it had stated, The following persons shall not be eligible for appointment as an auditor of a company. So this line has to be permanently settled in your mind. The following persons shall not be eligible for appointment as an auditor of a company. Who is the person? Now D clause is saying the following person shall not be eligible for appointment as an auditor of a company. A person who himself, here person who means who himself or his relative or partner. So there are three persons here. Person who himself or his relative or his partner. So disqualification, a person shall not be qualified, a person shall be disqualified for appointment as an auditor of a company a person who or his relative or a partner or his partner is holding any security. Here what we are saying is holding any security. So here the words are any security of or interest in the company or its subsidiary company or of its holding company or associate company or a subsidiary of such holding company. So this is also complicated to learn. So easy methods I have devised for you. You may note it down. Like in previous section 141.3c, I was telling you. In this section I will also tell you how to break it into parts. So here the exception, note down the exception. However, after we have provided the exceptions relative only in the case of a relative. Out of these three persons, who himself or his relative or partner. So relative has been provided in exception. What the law is conveying, the relative may hold security or interest in the company of face value not exceeding 1 lakh. So this is very important, students. It means up to 1 lakh, not exceeding 1 lakh, means up to 1 lakh rupees, he may hold the security or interest in the company, but not beyond 1 lakh. Up to 1 lakh, he can hold the security. But if it is the case of auditor or his partner, he may not hold security of a single rupee, but his relative may hold security worth rupees 1 lakh. Another important point, students, in this is face value. Here also you can get 2 marks question on this, correct incorrect question type. Here the word is face value and not market value. So please remember, this is face value not exceeding rupees 1 lakh. So this is D clause. This is how you can prepare your notes. A person who or his relative or his partner is holding any security of or interest in the company. If I am going to be appointed as auditor of the company, I should not hold any security in the company or in its subsidiary or of its holding company or associate company or subsidiary of such holding company or a subsidiary of the holding company. So I cannot hold any security in any of these. Maybe it company itself, maybe it's subsidiary company, maybe it's holding company or subsidiary of such holding company or associate company. So this is how you can easily remember. How is holding any security or interest in the company? There are 5 points, students. In the company, in its subsidiary, of its holding company. So company, subsidiary, holding company, associate company, subsidiary of such holding company. There are 5 points. This is how you can easily remember. This I have done for you. Or on the other hand, students, please remember the relative may hold security or interest in the company of face value not exceeding rupees 1 lakh. So this was the section. A person who or his relative or partner is holding any security of or interest in the company, This is the first point. In its subsidiary, second point, holding, third point, fourth associate company or fifth subsidiary of such holding company. So this is divided into 5 parts. Look at the example. Look at the example. Mr. A practicing chartered accountant, is holding security of XYZ Limited having face value of rupees 900. Here Mr. A, students, is disqualified for appointment as an auditor of the company because face value, important word is face value or any value. If I am holding, I am auditor or my partner holds security of any value, face value any, even single rupee, so I will be disqualified for appointment as an auditor. The only exception has been provided is in case of relative. A relative may hold security up to rupees 1 lakh. So Mr. P, another example, look at this example. Mr. P is a practicing chartered accountant and Mr. Q, the relative of Mr. P. Mr. P is a practicing chartered accountant and Mr. Q, who is relative of Mr. P, is holding securities of ABC Limited having face value of rupees 90,000. So here Mr. P is not disqualified, students, because a relative is holding security up to rupees 1 lakh. So this is how you can make the application. This is how you can make the application of the law. You can understand the application of the law. You can understand the implications. So here Mr. P is not disqualified for appointment as an auditor of ABC Limited. Next example. B, C and Company is an audit firm having partners Mr. B and Mr. C. Mr. A, Mr. A is the relative of Mr. C, is holding securities having face value. Again, you understand face value. I am not saying market value of rupees 1,01,000. So here B, C and Company is disqualified because the relative is holding security exceeding rupees 1 lakh. So B, C and Company, the firm of chartered accountants, auditor firm, is disqualified from being appointed as auditor of MWF Limited. Now, provided that the condition of rupees 1 lakh shall also be applicable in the case of a company which is not having share capital or other securities. This is what we have provided, that means condition. This is the condition. It is further provided that if after appointment I acquire the shares, in the event of acquiring any security or interest by a relative, so corrective action to maintain the limits as specified above shall be taken by the auditor within 60 days. For corrective action, the period is 60 days of such acquisition or interest. In the event of, this is how you can prepare your brief notes. You may note down accordingly, students. You can read out this. You can note down this. In the event of acquiring any security or interest by a relative above rupees 1 lakh, so auditor will take the corrective action. Here the time given to the auditor, the corrective action to maintain the limits shall be taken by the auditor within 60 days of such acquisition or interest. Very important point, student. Now this we have discussed is D1. D1. A person who or his relative or partner is holding any security of or interest in the company, subsidiary, holding company, associate company, or subsidiary of such holding company. However, the relative can hold the security of face value not exceeding rupees 1 lakh. Now, this is the first point. Second point. Look at the second point. Second point is a person himself or his relative or partner is indebted to the company. He is indebted to the company or its subsidiary, again देखो, or its subsidiary second, or its holding third, or associate company fourth, or a subsidiary of such holding company fifth point. In excess of 5, here the limit is 5 lakhs. Students is indebted to the company, person himself. So remember, Section 141(3) was saying the following persons shall be disqualified from being appointed as auditor of a company. And subsection 141 subsection Section 141 subsection 3 was stating this. C. D. Now this is D2. D2 is indebted to the company or its subsidiary company or its holding or associate company or subsidiary of such holding company in excess of rupees 5 lakhs. So a person shall be, in other words, you may note down this. This is for your brief notes and learning. This methodology will help you out in learning. A person shall be disqualified to be appointed as an auditor if he or his relative, look at this, a person shall be disqualified to be appointed as auditor if he or himself or his relative or his partner. There are 3 points. Is indebted in excess of rupees 5 lakh to the company or to its subsidiary, 5 points again, or its subsidiary or its holding company or its associate company or a subsidiary of such holding company. So 5 points you learn once and you can use many times. So one time learning will pay you in many clauses. You can have advantage in many clauses. So this is the second clause, D2, wherein we are saying that a person shall be disqualified to be appointed as auditor if he or his relative or his partner is indebted in excess of rupees 5 lakhs to the company or its subsidiary company or its holding company or its associate company or a subsidiary of such holding company. For example, students, an auditor purchased goods worth rupees 5,01,500 on credit from a company being audited by him. The company allowed him 1 month's credit, which it normally allowed to known customers. Now look at this example. where an auditor purchases goods or services from the company which is audited by him on credit, he is definitely indebted to the company. And if the amount outstanding exceeds rupees 5 lakhs, he is disqualified from appointment as an auditor. So here the amount is 5,01,500, worth rupees 5,01,500. So amount is exceeding 5 lakhs, he will be disqualified. It will not make any difference if the company allows him the same period of credit as it is allowing to other customers on the normal terms and conditions of the business. Auditor cannot argue that he is enjoying only the normal credit period allowed to the other customers. In fact, in such a case, he has become indebted to the company and consequently he has deemed to have vacated his office. So Mr. B, another example, students. This is very important from your examination point of view. B owes rupees 5,01,000 to C Limited, of which he is an auditor. Is his appointment valid? And will it make any difference if the advance is taken for meeting out traveling expenses? B's appointment here is not valid, students, and he is disqualified as the amount of debt exceeds rupees 5 lakhs. Even if the advance was taken for meeting out traveling expenses, it will not make difference. Even if the advance was taken for meeting out traveling expenses, students, particularly before the commencement of audit work, his appointment is not valid, because in such a case also the auditor shall be indebted to the company. Another example, Mr. Amar, a chartered accountant, bought a car financed at rupees 7 lakhs by Chaudhary Finance Limited. This is Chaudhary Finance Limited, which is a holding and Das Limited. Now this is holding company, and he got the finance of rupees 7 lakhs from Chaudhary Finance Limited, and Charan and Das Limited is the whole. This is the subsidiary company of Chaudhary Finance Limited. Now he has been the statutory auditor of Das Limited. If you are to be appointed as statutory auditor of Das Limited and continues to be even after taking the loan, according to section 141(3)(d)(2) of the Companies Act 2013, a person is not eligible for appointment as auditor of a company if he is indebted to the company or its subsidiary or its holding or associate company or subsidiary of such holding company in excess of rupees 5 lakhs. So in one of the 5 points he is covered. In the given case, Mr. Amar is disqualified to act as an auditor under section 141(3)(d)(2) as he is indebted to Mr. Chaudhary Finance Limited for more than 5 lakhs. Also, according to this section, he cannot act as an auditor of any subsidiary of Chaudhary Finance Limited. That is, he is also disqualified to work in Charan Limited and Das Limited. Therefore, he will have to vacate his office in Das Limited, even though it is a subsidiary of Chaudhary Finance Limited. So, students, hopefully you might have understood how to study the law, and I have received some queries. I would like to take the queries one by one. Okay. As all of the videos are marked as private.
It is a live session.
It is a live session. It is a live session. You can watch it live only. Another question student is asking, if limit crossed up with 5 lakh, whether he has to leave his office immediately or obviously you can send me this query through mail also. 5 lakh is considered for all company or considered at for all company. For the company in which he is appointed as auditor. Company in which he is appointed as auditor. Illustrate some corrective action. Definitely will illustrate in the next lecture. Your query will be answered in the next lecture. Yes, students. For more queries, you may get in touch with us at the following email IDs: rajeev.sachdeva@icai.in, karuna.bhansali@ici.in. You may also contact at the under mentioned number for your queries: 0120304595. Thank you very much, students. Thank you very much for the patient listening. Thank you very much, students.